All right, guys and gals, back to work, Fantastic job today. Hope you guys all made some money this morning. Now back to work. We got FOMC coming tomorrow. More importantly though, I see two clues on the charts right now that are tipping us off that we might get one of my favorite trading patterns tomorrow, a slingshot breakout. There are three trades to look for whenever I have a slingshot breakout on my radar for the following day. We're going to cover those three trades and a whole lot more in tonight's video. By the time we're done tonight, everyone will have a roadmap to make some money on FOMC Wednesday as well. Now we have a lot to cover in this important video. Charts are prepped up, so enough of the introduction. Let's go make some more money on FOMC Wednesday. Charts ready to go. Nasdaq triple Qs are all ready. The E-mini and the SPY is ready. I have two very important clues on these charts that are tipping us off to that slingshot breakout I mentioned a few moments ago. The first clue we have here is we're overall bullish on the 60-minute time frame on the S&P and SPY, overall bullish on the Nasdaq and the triple Qs. I like to use these higher time frames to give us the best overall direction of the market. That gives us our directional filter or bias for tomorrow. But the one thing these hourly charts don't do is they don't help us time the entry. I have one, I think even more important clue on some faster time frames, some tick charts. We're going to cover that in a moment, and that will wrap together our slingshot breakout for tomorrow so everyone has a roadmap to make some money. But before we talk about entries though, and that slingshot breakout for tomorrow, let's check schedule because tomorrow, of course, is FOMC day, Fed day, the big announcement coming out tomorrow. Everyone is waiting to hear if the Fed will cut rates by 0.25% or 0.5%. We'll find out tomorrow afternoon. But the most important thing for tomorrow is tomorrow is early in, early out. Markets are going to be illiquid as we get into lunchtime, 11:30, 12 o'clock Eastern time. So you want to get there early, prep those charts early, find those trades early, get rid of risk, lock up some profit, and then grab your popcorn and we'll watch the fireworks around the FOMC tomorrow afternoon. I'm not a big fan of trading the afternoons on FOMC day. We'll come back, of course, on Thursday morning and get back after it in our trade room. But let's get back to our charts, though, because it's good to know the game plan for tomorrow. But the money is made on the charts, right? I mentioned earlier, we have a really important clue right now setting up for what I call a slingshot breakout. One big clue was this bullish overall bias on the S&P SPY and, of course, Nasdaq and the triple Qs. But as I mentioned, this is not going to help us time the right entries for tomorrow. Let's now drill down to some faster time frames, some tick charts. This will make it much easier to time the entries tomorrow morning in our trade room. That is a 7,000 tick chart, by the way, if you're watching for the first time. And this is the 21 EMA. That's pretty much the only indicator we need to find lots of winning trades each morning. There is one very big clue here on these tick charts, and that is a bearish move down into a trading range. Now, ranges. We talk a lot about this in our free video classes. Two things about ranges. One is they act like magnets, and two, they love to rotate back and forth. We like to use these expanding triangles. We like to use these pendulum swings, basically symmetry above and below. Now, think about this important clue. A range tells me to sell high and buy low. We have a bullish overall bias on the 60-minute time frame. That means buying low is a great spot to trigger a slingshot breakout. Now, slingshot breakouts give us three specific types of trades I always look for during these situations. The first one is as we go lower, this is a horrible place to be a seller. We're a bullish overall market. We're right into some key support levels below us, and that range above us is a magnet. Now, you know me, right? I'm not gonna pick a bottom on this. I'm not gonna blindly buy into it. What I'll do is I'm gonna use what's called a failure pattern, specifically a two-try failure pattern. As this market begins to pull back, and again, I don't know how far it will go. It may go a bit further than that. But what I do know, though, is, but if I can see rookies trying once, trying twice, higher high in price, two clear separate tries. See, now we got those bears are trapped. Now we know where the stops are, and we can buy right into those stop losses to complete that rotation back to the side of that trading range. That is one of the 3 trades we look for during a slingshot breakout. Again, these are called failure patterns, like I teach in the free video course. Now, we know where the market wants to go, right? It wants to rotate back in the opposite direction. As it makes that rotation, this we look for the second out of 3 trades. It's called a trap pattern. Now, trap patterns are very specific. You need to learn these setups, especially during range rotation like this. Trap pattern, it's a higher high in price where that pullback barely comes back to the moving average. The best traps will barely miss that pullback to the moving average. Higher high in price, shallow pullback, get below that prior swing, a strong green candle closing above that 21 EMA, and that is trade number 2. It's called a trap pattern. In this case, it's a bear trap, like I teach in our free video classes. Now, this is where the magic happens. We're overall bullish on the 60. We now have all of this momentum now swinging off of that low. The third and final trade we look for a slingshot breakout is now what was resistance now becomes support for a breakout pullback. Now, when I think breakout pullback, I think about a 2-legged pullback. What's a 2-legged pullback? We get below the moving average, we pull back, and we go lower. When I think of a breakout pullback off the top of that trading range, I think about a 2-legged pullback. A 2-legged pullback, think about a measured move that goes a bit too far. Again, get underneath that moving average. That's one leg. Measure it down, and I want to see us go a little bit more than that measured leg. Now, at this point, this may keep on going. It may keep on rolling back over, and later on in this video, I will talk about how to short that, how to know the difference to the breakout pullback and a sellable market right there. We'll cover that a bit later on. But what I'm going to do is now watch the pullback here to that 21 EMA. This is not a great place to be selling. I can sell up here. I don't want to be selling down here. Remember, it's an overall bull market. Lots of momentum now for those buyers. This is where we look for that same failure pattern and then into that trap pattern combination. I'm running out of space here right now, but that's the goal, right? The goal is to tie together now that failure into trap combination. Now, one very cool part about breakout pullbacks is the size of that breakout leg is a measuring leg. I can take the size of that breakout leg, I can pin it down at that low, and that gives me now the measured move. If you want to make more money, get better at avoiding losses and holding on to your winners. A great example, if I know how big that breakout leg is, now I know how far to let that runner target go to my final profit target and build up more profit on that trade. So again, it's a bear range in an overall bull market. If the trading gods are watching down on us tomorrow, we'll get that slingshot breakout. It's a failure pattern off the low, trap those bears in. It's a bear trap pattern. As we go higher high in price, shallow pullback, and then again, it's that 2-legged pullback after it blasts up. 2-legged pullback followed by that failure into trap combination. And again, right, think about that measured move going higher. Now, let's slow down for a second because I know that most of you guys and gals watching right now, you know these patterns, you know failures, you know traps, you know we love 2-legged pullbacks. But if you're watching for the first time right now, this might be a brand new language to learn, a brand new strategy to learn. But don't you worry, I teach this entire roadmap. I have hundreds of examples of failures, traps, and a hell of a lot more. I teach everything in so much more detail in our free video classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free video course, that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room so we always know where the best winning trades are going to be each day. More importantly though, we make our money by timing better entries. I want to help you time better entries and make money on your own. I'll teach you 4 my favorite entry patterns: failures, traps, pullback combinations. Guys, the markets are way too good not to be making consistent money right now. If you're tired of missing the best entries, if you've lost your confidence in your current trading strategy, hit that link that popped up there. Take that free video course, learn the roadmap. Perfect for anyone who is serious about making money in these markets. And also be aware too, keep in mind too, I'm gonna put all the important links you guys need in the description of the YouTube video. Start first with the free class links down there. Don't forget to, we trade together every day in our trade room with members. I'll put trade room membership information down there. And keep in mind too, I post a lot of charts and videos and mindset updates on Twitter or X. If you're on Twitter X, give me a follow and all the details you'll need, the description of the video. But that is the roadmap I look for, the 3 types of trades: that failure, that trap, and that breakout pullback. Now, I want to talk about if we go higher first on the Nasdaq. The Nasdaq's very similar to this, very similar game plan. On the Nasdaq chart, I want to talk about if we go higher first, because going higher first is very different than going lower first. I'm going to talk about going higher first in a moment. Before I do that though, let's talk about some variations of this, because you know kind of the gold standard, right? Run down, trap the bears in, and squeeze those stops. That's what I want down here. But you know what? Sometimes I don't get that 2-try failure. Sometimes we make our run lower and there's so much support down here, there's so many buyers down here that we don't get that failure and the market just kind of whoop and runs right back up again. If we get a V bottom off of this low, I wanted to think about this type of pattern. If it V bottoms off that low, it'll almost always begin to grind higher on the chart. Now, most of you guys watching right now, you know why we love these grinders, because grinders are easy. All we do is draw a trend line off the highs. We then take that trend line, we pin it down around that low, and then most important, look left, find a prior swing, one of these prior swing lows that lines up around the low of that channel, and you want the first test off the low of that channel. Now, this could be any of the entry patterns you guys are learning in the free video course. I love traps like this one. We also oftentimes get below that 21 EMA. That's where failure patterns live. Failures turn into pullback combinations. And remember, where does the market want to go? It wants to rotate the amount below, the amount above, and we know where this thing wants to run from there. So again, I would love to get that run down, trap the bears in and squeeze. But if we don't get it, keep an eye out for that V bottom reversal. The hardest part about the V bottoms is not chasing after it. That voice in my head is saying, come on, man, you're going to miss it, you're going to miss it. Don't chase after those moves. Your patience is rewarded on that first test. First test is the best test off of that channel. And then I got one more variation of this. If we make a run lower, oftentimes what happens is I will get that 2-try failure. We'll get the entry off that low, but we know that ranges. They love to break out pullback, right? So every once in a while, I'll get a 2-try failure. I'll get that first target hit. My stop will move up to point of entry. It's a winning trade, but whatever happens is, right, the bears come in, a lot of momentum, right, in that situation for the bears. The bears come in and they whack that sucker right back down and take out that low. Now, make no mistake, this is not a full-blown bearish reversal. Remember that hourly chart, right? We are way high up. It'll take a lot more than another leg lower to be a full-blown reversal. This is another bite at the apple. This is a gift to the buyers, because anybody who sells short right there, they're taking their profit. They become buyers down here. Is this a good place to sell? Overall bull market at major support with a range, but no, right? It's a horrible place to sell. But guess what? When I was a rookie, I chased these markets all over the place. I would sell stuff like this when I was a rookie almost 20 years ago. Do it again, okay? Do it again. Trap those bears in once, twice. Why twice? Because I want their stops. You know, I may not get the entire move, right? I may not get the entire bottom. You don't need to pick tops and bottoms to make a ton of money in trading. I just want that piece. I just want the meat in the middle of that move. Again, I may miss some tops and bottoms, But this is a much more reliable, more consistent way to take entries because now your bears are trapped in. If you're trapped in short and you get stopped out, what happens? You're buying your way out. That's why these failure patterns, they jump so well. And again, it's a failure into usually a trap combination. Remember that earlier? Higher high in price, barely pulls back to the moving average. If it grinds away from that moving average, that is a good giveaway. Mark off that low and find that trap combination. And again, this may really run, right? And then there is your run. There's your two-legged pullback, right? And that breakout pullback we mentioned earlier here on the lesson. I just want to make sure that you know that if we make a run going lower, we get that failure pattern popping up, but it rolls back over again. Look for it again. Again, we're not going to blindly buy it, right? We're not picking tops and bottoms here. We're going to trap those bears in, right? Use that failure pattern into that trap combination and go. A double bottom retest in a bearish move like this, overall bull market, is one of my favorite trades we look for every morning in our trade room. So now you know kind of the nuts and bolts of what a slingshot breakout looks like, right? A fake out breakout there, a rotation higher, and a breakout pullback off of that trading range. I'm getting kind of excited just talking about this stuff, right? That's why I love doing these videos on this YouTube channel. But now let's talk about the more difficult part of the process. What if we end up going higher here? Because this is going to be a little more difficult, right? The move going higher. If we go lower, it's a lot easier because we got that momentum running off that low. Let's grab the Nasdaq now. Nasdaq is very similar, as always, to the S&P. But before we dive into the Nasdaq, though, if you're enjoying this video right now, it would mean the world to me. Take some time out of your busy schedule, hit that like button for me, make sure you subscribe, and share this video with a friend. It goes a long way. YouTube rewards my channel, helps me grow this channel. Every time you hit that like button, subscribe, and share it with a friend. I know we're all busy people. I appreciate you carving some time out and watch these videos. So thank you so much for your support with this YouTube channel. Now, let's talk Nasdaq. Nasdaq is obviously very bullish here on the 60-minute time frame. You don't need my help to tell you that. On the tick charts, though, again, tick charts, 4,000 tick chart, upper left-hand corner there. On the tick chart, we look beautiful because once again, bear market into that trading range. We have the gorgeous opportunity now for a slingshot breakout, like I mentioned earlier on the S&P. I'm not going to go over the entire thing once again, but the same basic roadmap we talked about on the S&P can be applied here. Get underneath that range, trap those bears in, slingshot off that low, and buy that breakout pullback. This works well because, again, we have some divergence, right? We're bearish in a range here, but bullish overall on the 60. Now let's talk about if the market runs higher. I mentioned earlier that ranges love to rotate. Ranges love to rotate. So it's easier to do this if it rotates off that low. That's what makes a slingshot breakout. If we go higher here, though, one very big clue on the Nasdaq and on the S&P is this range right there. We know that ranges love to break out pullback. They love to break out and then pull back and run back down again. So be very careful buying this thing as it goes higher. What I would rather do is as we go up, if I start seeing the buyers struggle up there, I'm gonna look for a crown reversal pattern, which is basically a bull trap pattern. We call them crown reversals in our trade room. It's a lower low in price, above that high right there, strong red candle closing below that moving average, right? That's called a crown reversal pattern, right? Pretty simple idea of a pattern there. Want to make sure I trap in these buyers. Remember, overall bullish. Okay, as it goes higher, we may keep going here. We may keep going and then breaking out, pulling back. But if I start seeing these buyers come in and struggle above that high, think about that rotation back down again. Another variation of a bull trap pattern off this is a V-top reversal. So if we went up running higher here and getting whacked back down again, starts grinding back down, remember the grinding motion, right? That is the giveaway. Mark off that low, mark off that high. And what do I always say? Look left, find a prior swing that lines up with the high of that channel, and bingo. That is a beautiful spot for a bull trap winner as we try to rotate back and forth into that trading range. Those are two patterns I'm watching for if we run up into the underbelly of this range and get whacked back down again. Now, two more setups for the breakout pullback. If we pop up here and we start separating, very important right now, pay attention to this one. If we pop up and we start separating off of that moving average, remember, separation equals strength. Separation equals strength. If we pop up, we barely pull back and we're going higher, what's going to happen is this will try to make a measured move. Okay, measured moves are very common after a range breakout. What happens a lot of times is we see this initial pop up, that shallow pullback, that higher high in price, and we get a beautiful bear trap pattern on the way running higher. So as we go higher, it becomes a bear trap on the entry. Again, it's a higher high in price, and I have to see that separation. The separation is the giveaway, right? It's the giveaway. We run up, shallow pullback, keep going. The separation is the giveaway, right? That's the key when it comes to bear traps. Now, what's cool about this is that once we know how big that first leg is, now we know how big the measured move is. So again, you want to make more money, get better at holding on to your winners longer. Anytime we see a breakout, the breakout leg is the measuring leg. So we measure the breakout leg there, we pin it up here, and that tells us now, combine that along with that high, and that gives us a good target up overhead. Now, at this point, it's a pretty easy idea from this point. Now we're way high up. I don't want to buy high. I want to buy low, especially with that big high on the chart in front of us. Now, think about this. What was resistance now becomes support. So now we look for that same two-legged pullback. And again, it's one leg underneath the moving average. Very important. Underneath that 21 EMA. Second leg, again, is a bit more than a measured move. Ideally, this thing goes $1.25, $1.30, 130%, right? It overshoots that measured move. What that does is this puts this in oversold territory, overextended territory. It also confuses things for the rookies, right? Because they see this thing dropping off the high, they come in and chase after it. Bears try once, bears try twice. Again, ideally, this will be somewhere around those prior highs right there. Right? Makes sense, right? We'll use what was resistance becomes support. That's where the magic happens, right? It's a two-legged pullback running right into the previous highs of that trading range. And again, I don't have a crystal ball. I don't know how far that will go. We might wind up going higher here, and this thing might get crushed back down and begin grinding back down again, right? That's why we don't pick a bottom on that, right? It may keep on grinding down. And if it does grind down like that, how do you trade it? You know this one already. Off that low, off that high, look left, find a prior swing, and don't miss that first test, right? So if it does go up and get just crushed back down again, hello, tomorrow's FOMC day, anything is possible. So if it does get crushed going back down again, starts grinding back down, you know this one now, right? Find that grinder, don't miss that first test off the high of that channel. And again, pendulum swing, the amount above, the amount below, leave that runner, right? Leave that runner. Again, we're hoping though, we're gonna run up, get below that moving average, 1, 2, a bit more than a measured move. You don't blindly buy into it. We're not picking bottoms on this. We're going to wait for the price to pull back. If I start seeing bears once, bears twice, they're trying to rotate this, right? But again, it's a bullish market overall. Bull markets overall, we're more likely now to break out, pull back, and go higher because of the overall bullishness on the 60. Trap those bears in twice, use their stops to fuel that sucker going higher, squeeze those stops, whatever trim you want to use for it. And again, don't miss that add-on with that higher high in price, that shallow pullback, that barely touches the moving average, and there is your bear trap combination. Again, it's the size of the breakout leg. Pin right there, size the measuring leg. We'll use that for runners tomorrow morning in the trade room. All right, guys? That's the game plan for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time, come trade this stuff with us, guys. The easiest way to start making money in these markets is to learn and trade along every morning in our trade room, 8 o'clock Eastern time. I'm going to put all the important links we talked about tonight in the description of the video. Take the free classes first, learn the roadmap. People love the free video course. I think you will as well. And hopefully sometime soon I'll see you trading with us in the morning trade room as a member. All right, guys? Hope you learned a bunch today. Hope you use this knowledge to make a bunch tomorrow on FOMC Wednesday. And as always, thanks for tuning in. In the meantime, be well. Be nice to each other out there. And be here next time, will ya? Adios, amigos. Bye for now.